Hey everyone, it's Brandon from the Young Investors Podcast. Myself and Hamish are excited to bring you your weekly rundown of the latest business and investing news from around the world. A quick reminder before we get started that any advice provided by myself is general and does not consider your financial situation, needs, or objectives, so consider whether it's right for you. Brandon Kolk is authorised to provide general financial product advice in Australia and is authorised representative 1305795 of Guideway Financial Services Proprietary Limited, AFSL 420367. Please see the description box for my financial services guide. Past performance is not a reliable indicator of future investment returns, but with that said, let's get into another episode of the Young Investors Podcast. Alright guys, welcome back to yet another episode of the Young Investors Podcast. Guess what? We are back because Hamish Hodder is in the country. Welcome back to sunny Melbourne, mate. Welcome back. Yep. Bet you were itching to get home. Get me out of Croatia. Get me off of this sailboat in the sunshine because, gosh, I just want to go back to Melbourne.
Oh, yeah. I'm so glad to walk off the plane after being in 30-degree sunny weather for 3 weeks and be back in Melbourne. No, it actually is good to be back, but it's quite a harsh reality coming back to rainy Melbourne after being in the sun for so long. But yeah, it was a good.
I felt that when I came back from Vietnam, when I was in the hot, sunny, humid Vietnam, and then I came back to Melbourne in the winter. I was like, this ain't it.
It's kind of tough. But I didn't.
Well, give us the lowdown. Give us the lowdown of your journey.
Yeah, it was. It was pretty relaxed, to be honest. We were kind of sailing around most of the time, and we started in Montenegro, and then kind of just sailed up the coast of Croatia. And finished in Split in Croatia. And so, we're just kind of going through, spending a fair bit of time actually just kind of going along little towns on little islands and stuff along the way. So, it was nice and relaxing. I didn't actually think I would stay for so long. I thought it was only going to be 2 weeks. And then I ended up staying a little over 3 weeks, which, because I hadn't actually booked my return flight when I got there. And that was probably a mistake because when I got there, I was like enjoying it a lot. So I obviously stayed a little bit longer than I would have hoped for. Because I just checked my YouTube, my studio, and I think I haven't posted it's like 35 days or something. So
wow,
it's been a long break. But
that's crazy.
But yeah, I don't think I've taken a break like that ever since I started. So. Yeah. I think it was needed, and I feel refreshed. So I'm keen to get back. Yeah.
Yeah, that's good. Because I always wonder, if I took a break, would I feel refreshed and ready to get back, or would I just be like,
Well,
but no, you feel energized. Do you feel like inspired to like make stuff now? Or?
Yeah, for sure. And I think this year's been kind of weird though, because I feel like one of the biggest challenges, we were just talking about this, is there's a lot kind of happening in finance, but not a lot that I've personally found really engaging. And so taking a bit of time off so that I can think about, what I want to make and has been kind of good. As we were just talking about, it's not as if there was like a huge amount in the finance world that happened while I was gone, at least stuff that I would find interesting enough to kind of put together into a video. So, it's been a good kind of reflection period, I think.
It's just, it's been trying. Well, we were talking off air. I found that just with my last video, I wanted to make a video about the role of the government, the Federal Reserve, especially with, Jerome Powell taking so much heat from Donald Trump. Like, is it justified? What's Jerome thinking? Like, why are we in this situation where you've effectively got the government attacking the Federal Reserve? That one just did not perform. I thought because you kind of get a feel. You kind of get a feel with what's more likely to do well, what's more likely not to do well.
Yeah.
Like if I'm making a video about Michael Burry, I'm like, sweet. But no, I thought that one was actually going to perform quite well, and it didn't. So I think there is something to be said, just a little bit of maybe audience fatigue around Trump and tariffs and, central bank news and whatnot.
It's like there's been...
So with that said, guess what we're talking about today? Central bank news. But anyway.
Yeah. It's like there's been a lot happening in finance and economics, but it's like a lot of the same. stuff, if that makes sense.
Yeah.
Like, it's not as if
Same characters.
like the tariffs are meaningful and they're important and they're having different impacts, but it's when every single week it's tariffs this, tariffs that, or whatever it is. Now it's kind of Federal Reserve stuff. People just get a bit, I think you said it right, like fatigued on those topics.
It's also for the podcast.
Yeah, exactly. Yes. What are we talking about today? What have you got? We might save this for a little bit later in the episode, but I'm putting together a video at the moment on something that happened in the Indian financial markets last week. One of the biggest Wall Street trading firms was just outright banned from India. And it's a really interesting story. And so I'll talk through some aspects of that and kind of what I've been diving into, the rabbit hole that I've been in since I got back, as I've been trying to put together this video. I'll talk through that a little bit later because it's quite a story.
Okay, and I think the only other stuff. Well, I've got to talk about. I will touch on CPI. Inflation numbers came in because that has been in the news. It's been in the news in a roundabout way because we've been talking about interest rates and whether Jerome is justified in holding them steady. So we've got some inflation updates to see whether Jerome is justified and the Federal Reserve is justified. And Nvidia, they might have found a way back into selling in China. So we'll talk about that as well. And then if we've got time, we'll talk about this Trump media stuff as well. Trying to launch a new crypto ETF. All right. But yeah, let's do it, eh?
Well, with that said, today's episode is brought to you by Seeking Alpha, your one-stop shop for stock analysis, market data, and news. Access expert analysis and news for thousands of stocks. View buy, hold, and sell ratings from members, Wall Street analysts, and Seeking Alpha's own algorithm. Screen for stocks using a variety of fundamental and technical analysis metrics. Access 10 years of financial data and company filings, and manage your portfolio by tracking your investments with price alerts so you never miss a buying opportunity again. Click the link in the episode description to try Seeking Alpha free for 7 days. And for a limited time, you can actually get $30 off your first year. So go check it out if you haven't already.
All right, here we go, hey? CPI, inflation.
Yeah.
You ready for this? This actually won't be too much of a story.
Well, yeah, tell us what's going on because I'm completely out of the loop of this. And correct me if I'm wrong, but up until now, there's kind of been very low inflation and kind of we haven't really seen any tariff impact or anything. Yeah. At least,
the setup is...
Yeah, give us a setup.
So the setup is, you're right. Inflation has been low, reasonably low over the last little while. And Jerome and the Federal Open Market Committee, they began lowering interest rates. They did 3 interest rate cuts at the end of last year. And then they've just held steady at this 4.5% range. And now the US government, and particularly good old President Trump, they've been quite critical of Jerome Powell and the FOMC because they wanted to just keep rates where they are because the last thing they want is for inflation to spike back up because of Donald Trump's tariffs. And they're on the downtrend. They're lowering rates, and then inflation just goes straight back up. Mm-hmm. So that's what they want to avoid. And Jerome's spoken about that at length. That's what happened in the 70s and 80s. They thought they had inflation under control. They lowered rates too soon and inflation just jumped immediately back up. Yep. So they're saying that they don't want to, that's like what they're trying to avoid. They just do not want a repeat of what happened in the 70s and early 80s. So they're keeping rates high. Well, not even high. They're keeping them at 4.5%. So they're just keeping normal rates, but they're not lowering. They're not actively lowering interest rates at the moment. And that's drawn criticism, particularly from Trump, because, he obviously wants there to be lower rates and there's not all that much inflation. So we're watching the inflation readings. And if the inflation rises, then I guess Powell is justified. And then if inflation lowers, then I guess Trump is kind of justified in a way. So what we got is the CPI report or the inflation report for the month of June. And this article here says consumer prices rose in June as President Donald Trump's tariffs began to slowly work their way through the US economy. The Consumer Price Index, a broad-based measure of goods and services costs, increased 0.3% on the month, putting the 12-month inflation rate at 2.7%. the Bureau of Labor Statistics reported on Tuesday. The numbers were right in line with the Dow Jones consensus, though the annual rate is the highest since February and still above the Federal Reserve's 2% target. Excluding volatile food and energy prices, so core inflation, that picked up 0.2% on the month and an annual rate of 2.9%, with the annual rate in line with estimates. The monthly level was slightly below the outlook for a 0.3% gain. It says here, before June, inflation had been on a generally downward slope for the year, with the headline CPI at a 3% annual rate back in January and progressing gradually lower in subsequent months, despite fears that Trump's trade war would drive prices higher. That's what we're just talking about. While the evidence in June was mixed on how much influence tariffs had over prices, there were signs that the duties are having an impact. One of the confusing ones, or unexpected ones, vehicle prices actually fell on the month, with prices on new vehicles down 0.3%, and used cars and trucks down 0.7%. So that's one that kind of doesn't match up with the inflation, with the tariff argument. However, tariff-sensitive apparel prices rose 0.4%. Household furnishings, which are also influenced by the tariffs, increased 1% for the month. Also, beyond that, shelter prices increased just 0.2% for the month, but the Bureau of Labor Statistics said the category was still the largest contributor to the overall CPI gain. The index rose 3.8% from a year ago. So a bit of a mixed bag. There's some stuff, as I said, like the furniture and the apparel, which is rising, which suggests that maybe the tariffs are working their way in. But then again, you would expect new vehicles to be a particular area where you would see tariffs cause inflation, and the prices came down. So a bit of a mixed bag. You know, both parties could argue it either way. You could say, well, Jerome's justified, but of course Donald Trump's going to find a way to say Donald Trump was justified.
Yeah, it seems like, like you said, it seems like it's quite a mixed bag. Earlier in the year, and maybe this is, still something we're going to see throughout the rest of the year, but certainly earlier in the year, there was, a number of people and the consensus really among economists was that we're going to see a very definitive inflation impact from tariffs. And of course, a lot of the tariffs have been paused, so it's not as if, we haven't seen these kind of widespread tariff policies for a long period of time that maybe will be something that happens. But it seems so far there's kind of mixed. It seems like there's like a mixed impact and nothing kind of definitive, and certainly not kind of a blowout of inflation. Although, I guess maybe some people would say it's still quite early days. So
a quote from the article here is, it's really hard to point to this report or any details in the report and say, aha, see what's happened to prices because of tariffs. And that quote was from Dan North, senior economist at Allianz Trade North America. Quote, you get these pretty massive tariff increases. It's bound to pass through to the consumers. And I still think it will, but it's just not in the report so far. And I think that kind of summarizes. It's not really, it's not obvious, I guess.
Yeah.
It's not like you can point to it and be like, yeah, there it is, baby.
Yeah.
And of course, what was the response to this? Well, Donald Trump, we haven't heard much out of the Jerome Powell camp, but Donald Trump has certainly used the report to initiate another call for the Fed to lower interest rates. Trump said, consumer prices low, bring down the Fed rate now. The president posted on Truth Social. He later added, quote, Fed should cut rates by, get this, 3 points. Very low inflation. $1 trillion a year would be saved.
That's hilarious.
There you go.
Yeah.
Cut it by 3. What is it now? 4. So he wants interest rates to be at 1.5%.
Just slap him back down to 0, I reckon. Let's just... No. Yeah.
Just delete the Federal Reserve. Why do we still have them?
Yeah. It is kind of funny. You do, like, I mean, yeah, so, inflation's, what was it, a 2.9 or 2.7%, 2.9% for core, which, is low, but you immediately get people, yelling, like, let's lower interest rates. And it's like, well, maybe, if you look at the chart, at least I'm just trying to look at the inflation chart, it's kind of been around 3% for quite a while now. And so you could definitely make the argument that the current level of interest rates is keeping it in an appropriate level. Maybe even a little bit too high, you might say. And so to make an argument that now we should lower interest rates in a meaningful way even further, I don't really see the rationale for that. Like unless you were seeing inflation kind of nosedive towards like 1%, 0.5%. What's like the rationale? It's kind of been, inflation's just been in a good spot for a long time. So the level seems fairly appropriate. It seems like they've got it just about right.
It's crazy just to see what can happen though if Trump just ramps up pressure, just like political pressure, and it just gets his supporters to hate the Fed and hate Jerome Powell.
Yeah.
It's like, it's crazy. Basically, that was the conclusion that I came to in the video, is that really when you look at the facts, you just take out all the politics and all the whatever, you just look at the facts. It just looks like the Fed is doing their job. Yeah. Like that's all it looks like. Like there's really nothing malicious. There's nothing crazy happening. It's just that when you consider, I spoke through this in the video, like the dual mandate, like what the Fed is there to do, like what their objective is. They're not there to play politics. They're there to keep prices stable while promoting maximum employment. That's the only thing they do. That's their dual mandate that they write first thing on their website. And if you look at it through that lens, they're just doing their job. Like Jerome Powell, Trump's been accusing him of playing politics and blah, blah, blah. But he's just doing his job. Like, I feel sorry for the poor guy. He's had so much stuff ramped up on him in the last week. He's been openly insulted in every single press conference that Trump does. Like, Trump's been calling him low IQ, or like he's nicknamed him too late. There's like so much crap going towards Jerome Powell for a guy that's just trying to just do his job.
Yeah, and he's doing a pretty good job, I think. So,
I mean, he's doing all right. Yeah, he probably the COVID stuff would have been hard for anyone, like because it's just unprecedented to know what to do in that time. But yeah, definitely like, you know, if inflation went up and then he rose, interest rates went up, inflation came down. Interest rates are cooling back down slowly but cautiously. It's like he's doing the right thing.
Yeah. Also, the idea that lowering interest rates so that the interest rate on government debt goes down is like a solution to the deficit is hilarious. Yeah. Like maybe just spend less and increase revenues. Maybe don't pass like a massive tax cut for the rich and cut. You know, like maybe don't add $5 trillion to the deficit over the next whatever years it was. Maybe don't do that, and then maybe that's a good idea.
Yeah. Well, that was essentially the point that I made in my video as well. It's like it's very convenient timing for Donald Trump to try and get the interest rates lowered when he's just passed a bill that's the Congressional Budget Office has analyzed will increase the deficit by $2.7 trillion up to 2035, I think. Right. So it's like the tax cuts proposed in that bill far outweigh the spending reductions. Yeah. So it's going to cost them a lot of money, but that it's going to cost them in a reduction in government revenue as opposed to necessarily spending more. Yep. So it's a convenient time when it's quite, I don't know, people are getting more switched on to government's wasteful spending. They get more, I'd say they're more switched on than ever before as to deficits and government, how they collect and spend money. I feel like people are really starting to switch onto that because the debt pile is so large in America and it's only getting bigger because the deficit is so bad. So, I mean, it's I don't know. Donald Trump said Jerome's playing politics, but it kind of looks like Donald Trump's playing politics, taking credit for the good and shifting the blame for the bad. So,
yeah, exactly. But anyway, none of this is important. The most important thing you missed. The most important thing every month when we do the CPI, the only thing that matters is what happened to the price of eggs. It's the only thing. Oh, crap. It's the only thing I care about. Even look. I don't care about the deficit. I don't care about...
have you looked this up?
I've got it for you.
You just put me on the spot right
Eggs,
now.
I've got it for you.
You've got it?
Yeah. Eggs went down in price. Eggs have been on the decline. Eggs have been improving. Woo! Minus 7.4% in the last month. So eggs are on the way back, although they are still up. Let me just check, 27% year over year. So unfortunately, eggs are still not on the menu. But
no, not yet. But
No.
we're getting close to them being back on the menu.
I did actually have eggs for breakfast this morning, so they're on the
Me
menu for
too.
me. But
I was actually going to say, when you called me and I was eating my breakfast, I was literally having eggs and avocado on toast.
that is exactly what I had for breakfast as well.
Dear.
4 eggs and an avocado. That's what I had for breakfast.
We're out of touch, Hamish.
I know,
We're losing.
Out of touch. No, but
What's the saying? Like, you're losing ground with the common man, or you're losing touch with the common man, or something.
something like that. Yeah.
Yeah.
Me and my eggs in the morning. Yeah, I'm so out of touch.
Yeah.
Yeah.
Well, I had eggs this morning. Did you? I don't think there's a problem in the egg prices personally.
Yeah.
I've been thinking it's been good, actually. There's been more for me to choose from in the supermarket.
Yeah, bowling out.
All right, shall we move on?
Yes. Tell us.
All right.
Tell us about Nvidia. And then after we do Nvidia, I'll get into this trading
fraud story of the
firm
week.
Story of the week. Well, it's not fraud.
Wait, is it a fraud
It's not.
story?
It's not fraud.
Oh, okay.
But it's market manipulation. So it's
Market manipulation story of the week.
Yeah. Securities violations.
Oh, okay. All right. Well, that's coming up soon. All right. I'm going to read this as quickly as possible just so we can just skip over it and get straight to your story. No, not quite. Well, we've been talking a bit recently in the last couple of months about, I think you brought it up in one of our most recent podcasts about how Nvidia has not been able to sell as much into China because of export restrictions from the US government.
Yeah.
But that potentially might be reversing. Wow. So CEO Jensen Huang was all smiles and compliments as he made his third trip to China in just about half a year. As the leader and co-founder of the world's first newly minted $4 trillion market cap company, that is insane, by the way, Huang had particular reasons to be happy when he met the press on Wednesday. Nvidia expected it would be able to resume sales of its less advanced H20 artificial intelligence chips to China after a 3-month pause. Huang said his understanding was that allowing Nvidia chips into China was part of an exchange with the US for Beijing to release critically needed rare earths. CNBC has reached out to the White House for comment, but not received anything back. Okay. The company was forced to halt such sales in April due to new US requirements at the time. I remember us talking about that on the podcast. The quote here is, in terms of the H20 ban and the lifting of the ban, it was completely in control of the US government and the China government. The discussion has nothing to do with me, Huang said, rejecting the idea that he played a part in changing Trump's mind. Quote, it's my job to inform the president about what I know very well, which is the technology industry, artificial intelligence, the developments in AI around the world, he said. Huang emphasized Nvidia complies with the final policy decision and that tariffs are just something the company has to adapt to. So there's a little inkling. I don't think anything's set in stone, but might be a little deal between the Chinese government and the US government. Chips for the stuff that makes chips.
Yeah, I mean,
rare earths in exchange for actual chips.
Yeah. I mean, I think regardless of how it happens, Nvidia will probably find a way to be able to sell in China. I mean, that was the entire point of the H20 chip in the first place. It was because there was restrictions on the the H100 chip, I think, which is like the really powerful one. And so they just created a less powerful chip, skirted the regulations, and then kind of sold that. And so I think they're always going to be able to find something they can sell to China. And given that they're so far ahead in terms of this chip technology, whatever they're able to cook up, I think China will want to buy it. And so, but this is interesting to see that now it's like kind of coming together as a part of this this trade deal.
Yep. says, what's next for Nvidia in China? US chip restrictions nearly halved Nvidia's market share in China, Huang said in May. Due to the US export controls on China, the company said it missed out on $2.5 billion in sales during the April quarter, and will likely take another $8 billion hit in the July quarter, pegging its sales at $45 billion over the period. The US effectively banned Nvidia from selling its most advanced chips to China back in 2022. Quote, I hope to get more advanced chips into China than the H20, Huang said in response to the CNBC question. And the reason for that is because technology is always moving on. It's not like wood. He stressed that years from now, there will be better and better technology available, adding, quote, I think it's sensible that whatever we're allowed to sell in China will continue to get better and better over time as well. I think that probably makes sense. But Huang would not give a definitive answer about how many orders Nvidia had received or when the company would restart local sales of its chips, which he acknowledged were not the company's best, but which could still train AI models. He said the US government was still processing the licenses for Nvidia to sell the chips to China, and that the company would need to restart its supply chain, a process he indicated could possibly take 9 months. Whoa. So that's another factor to consider as well. Of course, if you're not selling in China, probably your supply chain just has to shut down a little bit. So that can't be reawoken instantly. So it might take some time. But it looks as though we've got nothing concrete, it seems, but it looks as though it's getting a little bit more promising for if you're an Nvidia shareholder out there.
Yeah. It's and I mean, it's been pretty promising. I mean, I was just looking up the market cap, 4.2 trillion. Isn't that crazy?
That's unbelievable, man.
Like
that is crazy.
Even the fact that they're over 4 trillion is insane. But the fact that they added they're 4.2, you just hear like the 2 is 200 billion. Like that's the size of like probably 400 plus companies in the or more, like 490 companies in the S&P.
I'm wondering how much of Nvidia Jensen actually owns, because surely he'd be getting up there in the billionaires list, I would imagine.
Yeah,
just because his company is just so valuable.
Yeah, I don't know. He mustn't own that much.
Oh, he's number 6. He's number 6. 150 billion is his net worth now.
Right. Okay.
This is interesting. Wow, holy smokes. So number 1 is still Elon Musk, right? His net worth is now over $400 billion.
That's crazy.
Isn't that crazy?
Yeah.
$400 billion. The last time I checked, he was at like 200. So his net worth's like doubled in a couple of years.
Yeah.
That is just unbelievable. Man, that makes the Twitter acquisition look like absolutely nothing now. Remember how he was so stressed? He was like, oh, I spent so much money on the Twitter acquisition. $408 billion now, which is unbelievable.
Yeah.
Second is Larry Ellison. Distant second, $286 billion.
Yeah.
Third is the Zuck, $242 billion. Then Jeff has dropped to number 4 now, $236 billion. But then again, that makes sense. He's kind of in his party era now. Larry Page, $151 billion. Jensen Huang, $150 billion.
Yeah.
There you go.
Yeah, Musk pulling away.
Where's Buffett? Buffett's dropped to 10th.
Yeah. I mean, he's probably one of the only billionaires on that list that's also given away an enormous amount of his shares already. So
true.
Yeah, but
yeah, that's very true.
But yeah, Buffett. I mean, he should have bought Nvidia. I mean, if he bought Nvidia, then
clearly
he'd be number 1 on the list. Clearly. So,
well, it's an interesting case study, Hamish, because I remember us talking about it ages ago, just saying how, sure, the company's growing. This is years ago, I think we were talking about. It's starting to really pick up the growth rate, but the price is just so high that it's like if you're a value investor, you kind of wince a little bit at the valuation. But it is one of those it's one of those rare examples where, back in that time, it was a company where you could have paid anything. They're very rare examples, very, very rare examples, because you should not get into the mindset that, I can pay anything for this. But it was at that unique time where you actually could have basically paid anything because the company's growth has just been so insane over the past 4 or 5 years.
Yeah.
That the market cap or the revenue and even the profit now is just exponentially higher than where it was.
Yeah.
Which makes even the market cap we were looking at it 2-3 years ago seem tiny.
Yeah. Well, I think it puts forward the point that, you can't just look at like the PE ratio or something like that to determine if something's overvalued or not. At the end of the day, it comes down to, do you have this kind of confident view of how they will grow? Like if you were an Oracle back then, when they're at a 50 PE or something, but you knew for certain that what just happened with their earnings, where they went up at whatever many times, if you knew for certain that was going to happen, the valuation is irrelevant because you have this kind of you would have this confident view that they're going to grow. And so they're actually undervalued, even though they're at a 50 price to earnings ratio or something. But the point obviously being that you're making is, I don't think anybody could have come up with a very confident conclusion that they were going to be able to 10x their earnings or whatever they did. But if you could have, then there's nothing to say that 50 PE, 100 PE, whatever it is necessarily
Hamish,
overvalued.
no one could have seen it coming. That makes me feel better about things.
Yeah. Well, maybe not no one.
Makes me feel better about it.
But
no one could have. No, it's impossible. So there's no point even thinking about it. No one could have seen that coming. It's just you can't. You just got to put it down. No one could have seen that.
Yep.
It's like COVID. No one could have seen it. So, it's gone up by, we could have been millionaires, Hamish, if we jumped on board. But no one could have seen that coming. So we made the right choice in staying out. We made the right choice.
Yeah. Even if I did know, I probably wouldn't buy it. It wouldn't be fair.
Exactly. Yeah. No, exactly.
Yeah.
No. Well done us. Well done us. Misery loves company.
Yeah, exactly.
There you go. All right, Hamish, it's time.
All right.
Hamish's financial manipulation story of the week. Not fraud, but fancy accounting or something. I don't know.
No, it's not fraud. But I was looking for obviously something I have to make a video because I haven't posted in 35 days or something. So I was like, I need a video. I need a interesting story. And this kind of happened.
Hamish, you've woken up like after a month being like, oh, shit, I've got work today.
Yeah. Let me just see what's happening.
I better go to work.
Let me see if I can find some like interesting story that's happened. And one of the headlines that I saw from last week, actually, so this is relatively new, was that the American trading firm Jane Street Capital was just forced to pay $570 million in illegal profits. They had to repay these illegal profits back to India, and they've been completely banned from trading in Indian financial markets. And so
see you later.
I saw that and I was like, there's got to be an interesting story behind why this massive firm, which I'll get into what Jane Street Capital is, but this massive trading firm just received essentially a permaban from one of the, it's a relatively small financial market, but what's going to be probably a very large player over the next few decades as India continues to grow as an economy. And so, what is Jane Street Capital? You might actually not have heard of them, but they're actually a pretty significant player in the trading space. They're kind of considered the new kid on the block because they were only founded in 1999, so they've only been around for about 25 years. Which, well, I mean, if you compare it to some of the Goldman Sachs and Morgan Stanley, you're talking about companies that have trading divisions that have, exactly, have been around for many decades or even a century or something like that. The interesting thing about Jane Street Capital is they're a proprietary trading firm, and so they're not a hedge fund. They don't take client money and invest it and trade it. They just have their own money. They have about $30 billion from the owners who have founded the company, and they just trade their own money, and that's the whole thing. It's like they're their own kind of operator, and they're a private business, and so there's a lot of kind of secrecy around how they're making money and how they've been operating, and because they don't have clients, because they're not a hedge fund, they're actually skirting a lot of the financial regulations that are there to protect clients. And so they're able to kind of operate a little bit beneath the surface in some ways. And the main way that they make money has been being a market maker. And so you have a few market makers in the US that essentially take both the buy and sell position of trades, and then they make the profit from the little bit in between. So they're essentially providing liquidity for markets, making sure that there's always buyers and sellers. And the way they make money is kind of the tiny little profits they can get between the buys and sells when, say, we invest in a stock.
Yep.
And so that's kind of the main way that they make money. And they're a massive market maker, massive firm. Actually, last year, they accounted for 10% of all of the trades. So 10% of all of the trades touched Jane Street Capital, which means, that's an enormous amount. In ETFs specifically, so with like S&P 500 ETFs and that sort of thing, their trading volume was $707 billion per month in volume.
Wow.
And so they're doing a lot of trading.
Unreal.
Yeah.
Yeah.
And they've also had a huge amount of success in the last few years. So in 2024, their net trading revenue actually doubled from the previous year to $20.5 billion. In the first quarter of 2025, so the first quarter of this year, they're expected to have net trading revenue of $7.2 billion. And to put that in perspective, Morgan Stanley's trading division will do about 6.7 billion. So they're bigger than Morgan Stanley's trading division. Goldman will do 8.6 billion. So they're basically the same size as Goldman in terms of trading. JP Morgan is a little bit bigger at 9.7 billion. But essentially they're this firm that
is big.
If you say,
massive.
Do you know Goldman Sachs? Do you know JP Morgan? Most people will say yes. But when you say, do you know Jane Street? A lot of people would have no idea that this firm is just as big.
Oh, yeah, I think I met her once. Did I meet her at a party, Jane Street? Yeah, I think so.
Yeah. No, different Jane.
Oh, that's a different Jane. Oh, yeah.
But yeah, so this kind of this firm's kind of come out of nowhere and has kind of been blowing up. Also, a little fun fact: this was actually the firm that Sam Bankman-Fried got his start at. So this is the first.
What?
This is the first trading company, or the first job really that Sam Bankman-Fried had was working at Jane Street from 2013 to 2017, and he only left to start FTX.
FTX.
And so,
wow, there you go.
Yeah.
So really, he learned everything he knew from Jane Street.
Yeah, and the other thing is a lot of the executives at the top end of FTX. Obviously, FTX was this crypto exchange that ended up blowing up, and Sam Bankman-Fried's in jail now. But a lot of the executives from FTX also were kind of poached from Jane Street. Even Caroline Ellison, kind of the right hand woman to FBF.
Yeah.
Was kind of poached from Jane Street. So
interesting.
So yeah, it's
the plot thickens.
Yeah, it's like kind of an interesting little backstory. I don't know what he was learning at Jane Street, but he learned some tricks.
Yeah.
He learned some strategies. No, but but yeah. So Jane Street's been blowing up, and in particular, since 2020 is really where they really started to see a lot of success. And if you look at their kind of financial results since 2023, it's been kind of parabolic. Like they've just gone through the roof, and that's how now their trading division is kind of rivaling these big firms. And a big part of the reason behind that has been this trading strategy that they found in India. And so that brings us, now we're in India.
Okay.
And so
Yeah.
A little bit of context around the Indian financial markets. This is not something I'd kind of looked at all that much, but they've been kind of on fire. They've had 8 straight years of gains in the equity markets. And so it's been a very, very hot market in India. And they've also seen a huge surge in options trading. It's and so options trading, obviously, is kind of this like gambly way that you can bet on the movement of prices. And some of these numbers are crazy. So in 2024, they had daily turnover of derivatives of $3.9 trillion.
Wow.
Which is obviously insane. And they actually account for about 80% of the world's options trading volume.
What the heck?
Even though the companies in India only account for 4% of the world's market value, market cap.
Holy smokes, that's crazy.
And so their options market is enormous. It's in other words, the market for actually buying and selling companies, the pieces of ownership, is pretty small. But the market for betting or gambling on kind of short-term price movements is just off the charts.
That's great, man. That's actually wild.
Yeah, it's kind of insane. Another way to kind of put this in perspective is if you compare the kind of cash buying of real companies and to this kind of gambling, options market in the US, the options or the derivatives market is 9 times bigger than the actual equities market. In India, the options and the derivatives is 422 times bigger than the actual market.
Wow.
And so
that's phenomenal. It must be like a cultural thing over there. Like they don't even care about actual stock ownership. They're like, nah. Options all the way.
I was reading this and the thing that just popped into my head was that scene from The Big Short where they're like, and how much bigger is the synthetic CDO market than the actual market for mortgages? And he's like, 20 billion or whatever. And then it's like, that was the moment.
Man, I don't know. Maybe there aren't casinos in India or something. So they need to find their fun in other ways.
Yeah, I don't know. But yeah, they love their gambling on short-term on options. And the crazy thing about this is almost everybody is losing money doing this. So 9 out of 10 individual traders in equity futures and options incurred losses in financial year 2022. The average loss was 110,000 rupees, which the average salary of a regular worker in India is 228,000 rupees. And so it's about half their annual income.
It's lost to options trading.
Was the average loss.
What is going on?
Yeah, so and 9 out of 10 traders are losing money, and so pretty much everybody's losing money on options. And this huge options market, if you put the equivalent in US dollars, you could imagine like if 9 out of 10 people who were using options were losing money, and they were losing like $30,000 a year because the average income is like 60,000. So it's not small. It's not like it's a small, a small impact.
But you know how much? What'd you say? 228,000 rupees is?
Yeah,
it's $2,600 US.
Yeah, of course. Yeah, because it's I mean we're talking about India here, so
that's true. But yeah, true. Imagine just half of your salary just gone to your gambling addiction, your options gambling addiction.
Yeah, it's
wild.
And so you have this huge options market with everybody kind of losing money. So the question naturally is who's on the other side of the trades making all the money? Because options is a zero-sum game. It's not the same as the stock market. You're just speculating on price movements. And so if someone loses, someone wins. And the answer to that question is Jane Street.
Hey!
And so
there we go.
I don't want to kind of it's kind of difficult to explain the strategy that they're doing on a podcast, and so I won't. I'll give a very simplified kind of version of it, and I'll not to plug my own video, but when this comes out next week, I'll obviously give a much more detailed view when I have some graphics and stuff. So go check that out.
I see the old withholding information strategy. Yeah, I see.
Yeah, exactly. No, but it is kind of complicated, but the Indian government put out this 100-page report that kind of goes into it, and it's pretty interesting. But essentially, how this works. So you've got this kind of options trading market that's enormous, but the market for actually buying and selling stocks is relatively small. And so what Jane Street realized is that they could buy a ton of stock really quickly, really aggressively, and it would actually move the price of stocks around, even for some of the biggest companies in India. So like they have a few big banking companies at the top end of their market. But if they would just buy really aggressively in the morning, they could kind of push the prices around and manipulate prices. And so what they would do is on some particular days in the morning, they would aggressively buy some shares and essentially be able to push up the price of these banking shares and push the index as well, the price around. And at the same time, what they would do is they would buy a heap of put option contracts. And so they would place this huge bet at the same time, essentially that stocks would decline in the afternoon of that same day. And so, and then come afternoon, they would just aggressively dump the entire stock position and the stock would go down and their options bet would make an enormous return. And so it's the details of kind of how they're able to do this is kind of complex and technical, but essentially because there was such a huge options market and such a small actual stock market, they're able to make a kind of a small bet in the stock market and push the price around while making an enormous bet in the options market and making money through their kind of options contracts. And so
it's almost like more liquidity in the options market and less liquidity in the stock market, kind of to think about it that way.
Exactly. And like I said, it's kind of a visual. It would help to be able to visualize it. And there are some other kind of aspects that are kind of important to understanding how they're doing this, because they were buying individual stocks, but the options were actually placed on the index, and that had there's kind of some important pieces to that, but it gets really complicated.
Right.
And so
I think that makes sense though. But it makes sense.
Yeah. So essentially this is what they were doing. They'd lose a bit of money in the stock market, but they would make these huge returns from the option market. And in fact, over the course of 2023 to March 2025, the Securities Exchange Board of India said that Jane Street made about $4.3 billion in profit in the Indian markets. And they determined that a lot of that was illegal. So they essentially came out, and this was the news last week, that the strategy that they were using that I just described, and another strategy as well, were illegal because they were manipulating prices and kind of pushing prices around. Specifically, they determined that they'd made about $570 million illegally that they had to repay, which they were forced to repay last week.
Right.
And so that's essentially the story. They were forced to repay $600 million. They've been now banned from the Indian markets for doing this.
Interesting.
But it is an interesting story, and there's a lot more to this. I mean, a lot of people will argue and have been arguing that what they were doing wasn't manipulation, that it's just arbitrage, that they were just taking two sides of a trade and benefiting. I don't really think that's a good argument. I think there's a difference between, arbitrage is finding an inefficiency between two markets, whereas Jane Street was essentially creating an inefficiency by kind of exploiting the fact that there was low liquidity and they could push prices around. And so, but there's a whole interesting.
But is that illegal?
Well, I mean, it's their market.
I guess,
so
it's their market. But like the actions, I don't really know. But it's like the actions. There's nothing stopping you from buying a whole bunch of shares.
No, But I think if your intention is
that?
to just push the price around, I think.
Yeah, but like the intent, I'd say, well, one argument could be the intention is to make money. And when you buy a stock, all that we're doing in stock, our intention is to eventually make money, right?
Yes.
Like that's their so they buy a stock, they buy some options. They have figured out a way to. It's interesting because they've figured out a way to manipulate a market, but they've done it through. I mean, maybe you can just say that in itself is illegal. Manipulating a market, full stop. That's illegal, no matter how you do it. But the way that they've manipulated the market is through very legal means, like just buying shares, right? It's not like they're doing anything. They're acting on insider trading, or they're not acting on inside information or doing insider trading or anything like that's actually truly maliciously manipulative. They're just kind of like taking a position. It's kind of like could you find Hindenburg Research, the short selling firm that do their big short reports? Could they be fined for market manipulation?
Yeah,
because they do these research. Well, they're shut down now, but they do these big research reports where they go into depth and find some sort of potential fraud story that they can write about. They take a big short position and then they release that information to the public, and inevitably the price goes down and they make a whole bunch of money.
Yeah.
Is that market manipulation?
Well, I mean, if they were lying, it certainly would be. I don't think it is, because what they've come up with is real, and so like.
But I mean, that's like another instance where it's just like they haven't done anything wrong, but they have also they know a way to get an outcome in a market.
Yeah.
And they are exploiting that way to get an outcome in a market.
Yeah.
And Jane Street also knew a way to get an outcome in a market, and they are exploiting that way to get an outcome in a market.
Yeah, no, and it is very interesting.
It's interesting,
and you're right. I mean, so at the end of the day, it's obviously up to India to decide, what's allowed and what's not. And in this case, they've kind of looked and they've seen, okay, we have this enormous options market, and it's mostly kind of young men who are losing all of this money, and they've looked and they've seen, like, where's all this money going? And so they've found Jane Street doing this, and they've decided, you can't do this. And so, maybe they're the scapegoat of maybe they just did it. They worked a little bit too well. They found a strategy that was a little bit too good.
No, I think it's sad to see that, like, the people that are losing out are the actually new people. I'm kind of playing devil's advocate. If you can't tell, I'm not. We should screw over those Indian folk, and we should take their money. No,
but it does. All of this has kind of raised a lot of questions, because now I'm kind of really interested in looking at the Indian markets and understanding what's the consequence of having a gambly side of the market that's 400 times the size of the real market. That seems like it could have some bad consequences, but I don't know what it could be. But
seems like it could be exploited.
I might have to start a trading firm in India.
Hamish Street.
Yeah, I'm not banned.
Yeah, true.
It's just Jane Street.
Oh, that's hilarious.
They didn't really ban. Well, I guess they did ban the strategy. I guess they came out and said it's market manipulation. But just don't make $4 billion over 2 years, and I think maybe you'll fly under the radar.
No, well, if the problem is it all came from the same company. So what we need Hamish Street and we need Brandon Street, right? Hamish Street buys up the securities. And then, or Brandon Street. Oh, I can buy up the securities if you want. And then Hamish Street buys the put option contracts in the afternoon.
Do you think it's a good idea we're talking about this on air? I feel like maybe this could be some kind of evidence or something, but
Hamish, no one listens to this. It's fine. And then what we'll do is, because you'll be making the money and I'll be taking the losses. So then you can pay me for professional services, some description. And then we can split it 50-50.
Yep. All right. Sounds
done.
Sounds good.
Deal.
It's a great plan. Yep.
That's a banger plan. All right. Well, we'll come up with something.
But yeah. Anyway, so
there you go. Well, that's an interesting story.
Yeah. I mean, there was so much more I want to. I mean, there's a whole thing into how India even came to discover that they were doing this, and there's so much to this story. Right. I wish I could yap about it for another.
I'll say it for you. Minutes. I'll say it for you. But you'll have to go and watch Hamish's video.
Well, it's not out yet, so It'll be.
Will it be out by Saturday?
No. Give me like a week. Yeah. Give me a week. And I'll have it out.
Okay. Right. Yeah, interesting. Crazy.
There you go.
A crazy news story. All right. Well, do we want to do this last story? This story is pretty quick.
Yep. Yeah. Well, it's
Trump. I'll blitz through this one because we're already approaching the hour mark. Trump Media files for new crypto ETF. Trump Media filed last week with the Securities and Exchange Commission to launch a new fund, the Truth Social Crypto Blue Chip ETF, which would primarily hold Bitcoin and also Ether, Solana, Kronos, and XRP or Ripple. Its fees have not been disclosed, but the crypto exchange platform Crypto.com is stated to act as the fund's digital custodian. The move is the latest foray by President Trump's media company into the increasingly deregulated and saturated world of crypto products. This one I kind of wanted to add in just because, like, how crazy is it? Like, imagine telling someone in like the early 2000s that this is like a president of the United States is doing this kind of stuff, you know? It just would have, or like the 1980s or something.
Yeah.
It just would have been so, they just wouldn't believe you. They just wouldn't believe.
No.
It's crazy how it's just like, it's just messy with Trump being so crypto and Truth Social launching their, Truth Social launching a crypto blue chip ETF. I don't know. It's just crazy.
None of it makes any sense. But, you just got to go with it now. You know, when you see Melania coin pop up.
Well, I think honestly, I think it does make sense. I think it does make sense. I think I can see why it's happening, but I just can't quite believe that we've gotten to a point where it's happening.
True.
I can totally see why it's happening.
I wonder why.
that part is not lost on me. But yeah, anyway, I find that crazy. The filing taps into increased demand for cryptocurrencies other than Bitcoin, said Brian Armour, Morningstar's Director of ETF and Passive Strategies Research. As more cryptocurrencies are approved for spot ETFs generally, I think there will be more appetite and significant product development around an indexed version of multiple cryptocurrencies. So my guess is they'll appear in different ways. That's a quote from him. The problem is that Solana, XRP, and Kronos aren't yet available to trade as spot funds, which has slowed the launch of index-type crypto ETFs. That leaves little room for Trump Media's other two ETFs to differentiate themselves from existing funds. It's only a matter of time until SEC's approval of additional currencies opens the door for new players. However, quote, it's more of a level playing field because they'll be starting alongside other asset managers, and there's potential to differentiate. Also said Kronos has a significant overweight, but that might appeal to some investors to get that type of mix. So Trump Media, which operates Trump's Truth Social platform, has now filed for 3 strategies with the SEC. There's the Truth Social Crypto Blue Chip ETF, which has 70% in Bitcoin, 15%, 8%, 5%, and 2% going to Ether, Solana, Kronos, and XRP. There's the Truth Social Bitcoin and Ethereum ETF, which is just 75% Bitcoin, 25% Ether. And then there's also the Truth Social Bitcoin ETF, which would be spot Bitcoin ETF, aiming to serve as a Bitcoin reserve for the US government. So there you go, eh?
Yeah, that's kind of crazy. I was just trying to see what's been happening with the Trump Media stock recently, but it's not doing that great.
Well, Bitcoin's going off the charts at the moment, so if that's clearly they want a piece of the pie.
Yeah. Well, yeah, Bitcoin's up. Yeah, geez. 180,000 Australian dollars. Australian dollars.
Yeah,
Bitcoin.
120 US, I think.
Oh, that's absolutely insane. Jesus.
Yeah, it's pretty wild, isn't it? Yeah. Yeah, it's certainly been legitimized. Donald Trump's definitely helped to, I guess, legitimize the, just generally, just legitimize it, I guess, as a financial asset. If the US government is pro cryptocurrency, then it definitely gets legitimized.
Yeah, I'm really glad that a couple of years ago when I said that I hated Bitcoin, I sold all my assets and put it into Bitcoin behind the scenes. So
I'm just remembering that pizza that I ate for 50,000 Bitcoin back in the day. That was delicious. Best pizza of my life.
Gets better every day.
What was that story? That guy, he spent like 10,000 Bitcoin.
I think it was like 30,000 Bitcoin for two for 2 pizzas, I think. Well, I think that's what it was, 30,000.
Oh, that's just
Which was
so
like,
crazy.
yeah, it was like $1 billion or something, whatever that is now.
Yeah, $1 billion pizza. I kind of just it's obviously sad for that guy, but I really hope that the pizza shop owner kept the Bitcoin. So I can just imagine like this guy, he's running a pizza shop. He's hardly making millions,
Yeah.
and all of a sudden he's like, screw it. I'll take one, or I'll take his order in Bitcoin, whatever. Give me 30,000, whatever. And then just like he's just sat on that. He's just forgotten about it. He sat on it, and now he's like a multi-billionaire or something.
Yeah, he's like, wait, where did I leave that?
Yeah, shit. It's in the rubbish dump with the other guy's USB.
Yeah. No, some of those stories are pretty funny. There was another one. There was like a online esports tournament or something, and it was a pretty small tournament. It was like first prize was like I think it was $1,000. Second prize was maybe like $500. Third prize was like $200, and then fourth prize was 100 Bitcoin.
Oh my gosh,
that's really funny.
That's wild.
Because I don't know when it was. Maybe it was 2013 or something like that. But it's just funny. It's like now the fourth prize was whatever. How much money is that? Like 10 million or $100 million?
What did you say?
100 Bitcoin. So 10 million
times 100.
Yeah, it's like 10.
12 million.
Yeah, 12 million. So fourth prize was kind of big in that little the little esports tournament.
Crazy. That's wild. Anyway, all right, dude. Should we bounce out of here? We've just crossed the 1 hour mark. Good to chat with you again, my friend.
Yeah, it's good to be back. Yeah.
Yeah. Well, in some aspects, yes. In other aspects, no.
Yeah.
Welcome to winter.
Yeah. Hopefully the sun comes back. That'd be nice.
Nah, it will. It'll bring the weather with you.
Hopefully.
As Crowded House once said. All right, guys. Thanks very much for listening. We are going to peace out, and we'll talk to you guys very soon. See you next week.
See you guys.